house price growth in Australia is now expected to double previous forecasts, which means that decision you've been putting off, whether to buy property in 2025 or just wait until 2026, just became a whole lot more expensive to get wrong. Because I've been investing in property now for 23 years and helping investors for the past 9 years, over 500 of them. And I can tell you, getting your timing wrong in this market could easily cost you hundreds of thousands of dollars. But at the same time, rushing in at the wrong time or buying in the wrong place could be just as costly. So in this episode, I'm going to show you what's really happening in the Australian property market right now, and if you should rush to buy as soon as you can or just wait until 2026. Now, to answer this question properly, we need to look at what's actually happening in the market right now, not what many people think is happening. We need to look at the real data, because most people, they're still operating on outdated forecasts from earlier in the year. They think price growth, it's going to be moderate and steady, so they figure they have plenty of time to make a decision. But those predictions, they're already wrong. For example, over just the first 2 weekends in October, since the federal government's first home buy incentives came into force, we have seen a massive increase in buyer demand. Good quality properties in many of our capital cities, plus even our larger regional centers, are seeing multiple buyers per property. For example, one property in Victoria we looked at had 17 offers on that property. Another one in regional Queensland had 21 offers, and one in South Australia, it had nearly 30 offers. Now, without stating the obvious, there can only ever be one buyer per property. So when you have all these offers, everyone except one party misses out. And what do you think they're going to do when they see a similar property come on the market next time? They offer more. Many of these markets are rising $10,000, sometimes $15,000 every month, because that's how much more buyers are offering on property. So that buyer desperation, that fear of missing out, or FOMO, it's absolutely what is driving the market right now. The rate of price growth is accelerating as we head into spring and then summer, driven by record low listings. And here's the kicker. House price growth is now expected to double previous expectations. Analysts who were expecting modest increases, they're all now revising their forecasts upwards significantly. When you have fewer properties available and more buyers competing for them, prices, they don't just rise, they rise fast. And that's exactly what we're seeing right now. So please, don't rely on market predictions from 6 months ago or recently sold property prices from even 2 months ago. That's all outdated. The market has changed. You need to look at what's happening right now in your market, in your target areas, actual sale prices, days on market, listing numbers. The data is changing more rapidly than I have seen in a very long time. And your decision needs to be made on current reality, not outdated forecasts. But if you're about to buy an investment property in Australia, or even thinking about it, there's something you absolutely need to check out first. It's a free guide that shows you the exact checks I recommend before you commit to anything. I put the link in the description. But it's not just about supply being low. There's something else that's happening that's changing the entire dynamic of the market. More Aussies are expecting a property boom. You see, most people see headlines about property boom expectations and think, it's just media hype. They dismiss it as fear-mongering designed to push people into buying. But they're missing what this actually means for the market. For example, I have never seen so many buyers making crazy, ridiculous offers on property. On one property we looked at last weekend, someone offered $70,000 more than what we said the property was worth. And we're not talking about a $3 million property here. We're talking about a property in round about the mid $700,000 mark. That's how crazy people are being right now. On another property, a buyer made an unconditional offer on a property they never saw. That's right. They never saw the property. They never got a pest and building inspection done. They just bought the property based off photos they saw online and locked themselves in. They were just so desperate not to miss out. Confidence that property prices will rise in Australia has now hit a 15-year high. And when sentiment shifts like this, it becomes a self-fulfilling prophecy. Investor FOMO is already kicking in. First-time buyers are flooding back into the market. People who were sitting on the sidelines are now actively looking. And every single one of them is competing in the same limited pool of properties, which is lifting prices fast across multiple markets. When thousands of buyers suddenly decide to act at the same time, it creates an absolute surge in demand that puts even more pressure on already low supply. So pay attention to buyer sentiment in your local market. Are you seeing more people at open homes? Are properties getting multiple offers? These are signs that the competition is intensifying, which directly affects your negotiating position and the prices you'll need to pay. Now, whenever prices start rising this quickly, people out there start talking about a bubble. They start predicting property crashes or watch out, the bubble is going to burst. So let's just address this directly. This is not a bubble. It's a fundamental market change. I see so many people who assume that, okay, rapid price growth, that must equal a bubble that's about to burst. I'm just going to sit on the sidelines and wait until there's blood on the street, prices crashing, and then I'm going to get a bargain. They're waiting for the inevitable crash because they've heard that what goes up must come down. But they don't actually understand what's actually driving this market. You see, if there was ever going to be a property bubble burst in Australia, it would have happened in 2023 when interest rates were rising sharply. I mean, so many people out there predicted prices would crash. Instead, what happened? The market kept rising. If you've been following me for a while, you'll know that I was one of the few back in 2023 that said that prices would rise. So many people thought I was absolutely crazy, but what happened? Prices rose significantly in multiple areas around the country. And prices again will rise significantly. Why? Because of the fundamental shortage we have of properties in Australia. This is not a bubble. It's a total change in the market structure. Houses are where people live. Once they buy, they don't sell just because the market shifts. They're not day trading their homes, not to state the obvious. So even when interest rates rose and conditions got tough, sellers held on because the average Australian will do absolutely everything to hold on to their home, which is very different from other countries around the world. And that shortage of homes that I've been talking about multiple times in the past, that's even more pronounced today. This is a fundamental supply and demand imbalance. It's not traders on Wall Street losing their mind and getting greedy. So stop waiting for a crash based on bubble logic. Look at the fundamentals instead. Keep it simple. Look at supply levels, construction activity, population growth, and rental vacancy rates. These will tell you so much more about future price direction than bubble theories. But there's another factor pushing up prices that a lot of people still don't fully appreciate. And that is first home buyer incentives are actually driving the market higher. People see government incentives for first home buyers and they think, great, that'll help with affordability. It'll help more people get into the property market. Well, they actually don't realize that these schemes push prices up much higher than if the schemes did not exist. Let me explain. The federal government's first home buy incentives have already started driving the market higher just 2 weeks since they started. You see, when you make it easier for people to get into the market without increasing supply, you're not solving affordability, you're actually fueling the housing affordability crisis. Economists are calling these schemes a cruel illusion because while they may help individual buyers get into the door, they pump more buyers into an already tight market. More buyers competing for the same limited stock means sellers can ask for more and they're getting it. So if you're an investor looking to buy a property in that first home buyer price range, which really is anywhere from about $650,000 at the lower end to $1.5 million, depending on where you're looking to buy, understand that speed is going to be your biggest asset. But speed alone could kill you. You need speed with due diligence. Do your research based on current sales activity. Like I mentioned earlier on, negotiate hard and buy as soon as the right opportunity comes along, because the longer this scheme runs, the more it's going to inflate prices. All right, so we've established that demand is high and getting higher. But what about supply? Isn't the federal government also trying to fix the supply issue? Well, here's the truth. Building approvals are falling. People seem to assume that when prices rise, developers are going to rush in to build more properties and eventually supply will catch up. They think the market will naturally correct itself, so they should just wait. But that's not what's happening. Building approvals are actually falling. They're not rising. We are so far below our target. Apartments right now are driving a fall in dwelling approvals, which means we're not building our way out of this shortage. If anything, the supply problem is getting worse. When supply can't respond to demand, there's no natural ceiling on prices. The shortage continues, competition stays fierce, and prices keep climbing regardless of how much they may have already risen. So factor ongoing supply constraints into your investment decision. If new construction isn't ramping up to meet demand, the supply-demand imbalance will persist, which will support continued price growth. This is not a short-term spike. It's a structural issue. Now, there's another indicator that tells us what's actually happening on the ground. Auction clearance rates are approaching 2 years high. Now, people see high auction clearance rates and just think, the market is doing well. They don't understand what this actually signals about competition and your ability to negotiate. You see, if auction clearance rates are approaching their highest levels in 2 years, that means properties are selling and selling consistently. When auction clearance rates are this high, it tells you that sellers have the pricing power, not buyers. Buyers are competing with each other. And here's what's making it worse. Many sellers are now resisting the urge to sell because they're worried that they can't buy something else. This creates a vicious cycle. Low inventory keeps prices rising fast, which actually discourages more sellers from listing their properties for sale because they're worried that if they sell, then prices might rise too fast before they can find something else to buy and move into, which keeps inventory low. So when auction clearance rates are this high, you need to be ready to act decisively. Get your finance pre-approved. Do your research ahead of time and know your walk-away price before you bid. In this market, hesitation means missing out. And in markets where there aren't many auctions, this still applies. I'm seeing too many markets where there are, like I mentioned earlier, upwards of 20 offers made per property. The only way you have a chance of getting the right property at the right price is to do your research in advance and know exactly what a property is worth before you make the offer. So now that we've looked at all the data, should you wait or should you buy now? Well, every single factor we just covered is pointing in the same direction. This isn't some bubble waiting to pop. If it were, it would have popped back in 2023 when rates were rising. This is a fundamental supply shortage that's getting worse. So what could waiting actually cost you? Well, based on current growth rates, waiting could easily cost you hundreds of thousands of dollars. That property you're looking to buy it today could easily be worth $50,000 more in just 3 months' time, maybe over $100,000 more in 12 months' time, or you might struggle to find anything at all. So the data's clear. Waiting isn't the safe play. It's the expensive one. Every month you sit on the fence, you're likely losing ground, you're likely losing money. But here's the critical caveat before you rush out and buy anything, because you just can't buy anywhere. Some people, they seem to hear all this data and think they should just buy any property immediately because the market's so hot. Others get so caught up in trying to find the perfect property, they never actually buy anything. Both approaches will cost you. Here's the reality. Yes, Australian property prices are rising fast and likely to rise the fastest they ever have. But that does not mean prices are rising everywhere. Some suburbs have actually seen prices fall, and prices will continue to fall despite the overall national market being so strong. So you just can't throw money at any property and expect it to work out. Location still matters. Property type matters. Local infrastructure and employment matter. You need to do your due diligence on specific suburbs and properties, not just rely on national or city-wide trends. Don't wait until 2026 if you can afford to buy right now, but don't rush into a bad decision either. And to help you, I've opened up a handful of call bookings where you can book in a call with a member of my team to find out how we might be able to help you break down the market, find the right areas, and help you build a plan that actually works. Now, we only have a limited number of calls because I work with every single client personally. We're a boutique organization, and so I only have so much time in a day. So if you don't want to miss out, grab one of those handful of bookings while you still can. The link is in the description below. So you've seen that the key isn't waiting. It's choosing the right property in the right area. And that's exactly what I'm covering in the next video. The best properties to buy before 2025 ends. I'll walk you through the areas that still have upside and show you how to avoid some of the most common traps I'm seeing many first-time investors make. Click here to watch that next.